Hello and welcome everyone to another weekly market commentary from StashAway. Of course, with us, our Chief Investment Officer, Freddy Lim. Freddy, how are you?
Hey, Philip. Welcome to February. Another month, another new
Another
milestone
month
to
down, huh?
We had less time for the year now to do a lot of stuff.
Yes. Well, hey, a long year ahead, and hopefully we'll get to be traveling soon. I think, when it comes to vaccine, it seems like the US is getting on track, right? And we're seeing, obviously, more and more people receiving the vaccine everywhere. So hopefully we'll get back on track soon.
On that point, absolutely. The US is actually having amazing progress on vaccines as compared to, in contrast to Europe. As you know, the European Union had a beef with the likes of AstraZeneca, right, where timelines for delivery has been delayed, right? And the truth is, however, there were a lot of stuff going on behind the scenes where, because AstraZeneca has contracted with a lot of other parties, it kind of felt unfair that the region that needs the vaccine quickest and needy of it is not getting it. So there's some risk with respect to an EU ban on vaccines export. And if that happens, that certainly could create a ripple because, Singapore may think that they're going to get the Pfizer BioNTech one and supply could be disrupted, same as other countries. So just to watch that.
Yeah, I think that there will be still some race to get everyone vaccinated until hopefully last end of summer or something like that. But that's a good update on the vaccine. We'll keep an eye on that, Freddy. But we did get a couple of questions that we wanted to highlight and answer today from our listeners. And the first one is from Ryan Tum, and he's saying, "Hey, Philip and Freddy, congrats on the new milestone. Can you please briefly share what are some of the risk management techniques that StashAway employs for its portfolios?" Over to you, Freddy.
Thank you, Ryan, for the very interesting question. I think can go on for 3 days, but I'll be careful with time. Risk management, we believe, has to be preemptive rather than reactive. You can't just do something only when you heard about it in the news. So day one, before we invest your money, there's quite a number of process that goes into it. For example, we always balances out the selection asset classes in the portfolio with enough protection. Unless you went for our very high risk portfolios, most portfolios you would see, they do have international treasury, they have some carbon bonds, they have some gold. Regardless of what they would expect to do in returns, that their role in the portfolio is more protective in nature. And two, something that's more unique to StashAway is we used currency exposure for systemic risk management a lot. As you know, the summary is this: funding currencies, safe haven currencies, such as the US dollars, the Japanese yen, the Swiss franc, they tend to outperform a lot in a global market meltdown. We've seen it in 2008, you've seen it in COVID-19. And so actually our algorithms, other than allocating assets, it also tallies your exposure to, it targets a certain exposure to safe haven currencies based on economic fundamentals. And when times are good is when you want to start buying some protection. When times are already bad, you actually need to lock in your protection gains and go the other way. So we systematically manages that true currency exposure. So extreme risk reduction with currency allocations.
Thank you, Freddy, and thank you, Ryan, for this question. I think a lot of people ask themselves the same question. So great question, Ryan. Next question, Freddy. Calvin Chan. He says, "Hey, StashAway, thank you for doing this series every week." Thank you for listening, first of all. Calvin says he has a question regarding the re-optimization that we offer to our clients, Freddy. He says, "We get the option to turn it on and off. May I ask if the original StashAway portfolios, for those who invested in 2017, is the performance compared to the optimized portfolio?" So let's say you didn't you turn it off, right, and you kept investing in the original portfolio. Maybe you also go back, Freddy, and actually explain what the optimization means, just quickly for the listeners that don't know?
Well, a lot of people confused it with rebalancing, which is rebalancing is just because the market's moved and your allocation in the asset class may change a little bit too much from your target. You buy, sell to return it to target. Whereas re-optimization is a process at StashAway where we explicitly changed the target allocations. And the change could be triggered by changes in the economic environment and also changes in valuations. When these two are the biggest reasons for why we would change your allocations. As you know, right, when the economic environment changes, an asset class returns and risk not going to stay the same as well, right? So, for example, if we head from a growth-oriented environment to a slowdown, equities in your portfolio is going to have more volatility and perhaps even lower expected return. So the re-optimization is sort of designed to make sure, number one, we change the target allocation in such a way that your risk is kept constant, and your risk was not constant in this case, right? In the slowdown, your risk is gradually creeping up. So we want to return it to the target. And two, also to harness economic information and also valuations of assets to perform better. And now the final point is in terms of actual data, what's the difference in performance? In the very, very long term, actually, total return is very small differences. But the volatility of getting there, the path of getting there, the way we get there has become a lot more stable, a lot less volatile with the re-optimization. So this means that if you divide the return by volatility, the risk-adjusted return actually became significantly improved with the re-optimization. So I don't know if I'm answering the question, Philipp. I guess I'm trying to say the answer should be risk-adjusted returns has improved a lot. But in the very long term, you probably don't see it. Yeah. Don't see much differences in terms of total return.
Yeah, no, that makes sense. And I think for Calvin or anyone who's listening as well that wants to learn a little bit more about that, you always have, invited to join Freddy in our deep dive seminar on our asset allocation model, where Freddy, you go a little bit more deeper into this topic and you actually show the differences in the different environments and why we're actually optimizing the portfolio. So if you want, feel free to look on our website to see when the next webinar on deep dive is coming up and join us for that. So then that way you can get a little bit more deeper information on that. So thank you, Freddy. Thank you, Calvin. We do have some webinars coming up for Singapore and the MENA region. We have StashAway Portfolios Performance and Ask Freddy Anything Live. So that will be super fun. You can ask Freddy even more questions than just today. So anything that we didn't answer, go online and ask Freddy during that session. That's on Tuesday, the 9th of February, 2021, 7 p.m. Singapore time, 3 p.m. Gulf Standard Time. So please join us for that. Links are in the description below, as well as on our website. Also for Malaysia, we have a webinar on how to plan for your retirement. So we'll talk you through different retirement strategies and how we can optimize those as well. That's on Wednesday, the 10th of February, 6 p.m. to 7 p.m. Malaysia time. Both of those links, again, are down in the show description below. Thank you again for all the questions for this week. Freddy and myself will be back next week and looking forward to more of those and connecting with you then. Have a great week, everyone. Bye-bye.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.